Kohler, well-known, nationally syndicated, recognized CPA attorney, small business owners in America. You've been on our show before. We've done some stuff together. 4 best-selling books, The Business Owner's Guide to Financial Freedom. Love that, by the way. What your CPA isn't telling you. Give me one thing real quick, Mark, before we get started. I'm already hooked on this by itself.
Okay.
One thing that the CPA is not telling me, other than I make more money than he does.
Not self-directing.
It's not self-directing the 401.
Not self-directing the IRA or 401, which is huge in your world too. People needing to be getting your funds through the retirement account. CPAs are clueless with that.
Yeah.
Number 2, real estate professional. You see it too. Realtors, CPAs do not get that whole pass-through loss thing.
Yeah, we'll talk about both those things. This year you've had what, 65 million views on YouTube, dude. I'm gonna get that up to 100. All right,
dude, you rock. That'd be awesome.
You got the Main Street Business Podcast with 2 million downloads. What's the name of that show?
Main Street Business Podcast. We're going to change it to show. Actually, that's going to be a branding change this year. And I trademarked Main Street Business Podcast and services and show. Main Street's kind of where we're at. We hate Wall Street, love Main Street.
Until you change it, we're going to stay with the Main Street Business Podcast.
Yes, sir.
Because we're going right now. You and I are in the interview right now, bro.
Oh, man. Well, that's legit, live and uncut.
So look, you no longer operate a personal accounting firm, okay? But so what is it you're doing now?
Really what my life's calling has been, and it's interesting, I know you talk about this with your followers, is when they find what their real calling is, it just that alignment creates so much power to succeed. And for 20, 25 years, I've been feeling like I got to train business owners and try to reach as many business owners as I can, which I still do.
Yeah.
But in the last year, I've shifted to go, you know what? I'm going to train my competition, which I used to think was my competition, but they're just my tribe. And so I've put together a certification program that I've been using internally for years, training CPAs and attorneys. And now I'm like, I'm going to just help enrolled agents and CPAs around the country go next level with their clients, which allows me to have a greater reach. And so for my life's calling, I just am like taking every creative freaking strategy I know in the tax and legal world and training other professionals and helping level them up. That's my calling right now, and I'm loving it.
So, and I appreciate you being here. Mark, what is like 32 million small businesses in America? We got banks failing right now. I think we're going to have a bunch more fail. Actually, I predict that we have another 700 or 800 banks fail in America. I think the small business owner trusts his CPA or his tax guy or his lawyer to know everything. Should they be doing that, or should they be getting involved in their own understanding of tax code, accounting, what's right, what can you write off, what can't you write off, where's my money safe, where's it not? Talk to me about the importance of that.
You bet. When you asked that, I literally just got chills. I may be a little emotional today because I love the opportunity to be able to look this fellow business owner in the eyes and say this: you have to be the captain of your own ship. You cannot expect your professionals to just be constantly looking out for you, expecting they're going to just wake up one day and call you going, hey, Tom or Judy, I had this great idea. They're not going to do that. You have to drive your ship. And I know you, Grant, you pour over financial statements. You pour over the tax and the legal and the wealth building and what are the balances of my accounts and the ROIs. Business owners, you got to own that stuff. You got to, and I think that's the number one mistake of small business owners. They think it's just going to happen.
So where do people start with that? Should they be looking at their finances every day? Should they be looking at their tax obligations? Like a lot of it's just overwhelming. So where would you tell let's say a small business owner, or let's say it's an entrepreneur, sales guy making 80 or 90,000 bucks a year, trying to get a handle on where's my money? What interest rate am I getting from a bank? Like, I think most people have no clue of where anything is, how much they're paying in taxes, what they're earning on their money.
Okay, 3 steps, and you're freaking gonna love this. And I like the way you asked that. And this is organic. I'm just throwing down here.
Yeah.
Number 1, people sit down tonight, this weekend, turn everything off. Maybe you could have an old movie on you've seen 50 times, whatever. Put on some Breaking Bad. Sit down at the table and write out your personal financial statement. Dig up all the numbers. What's in this account? What's in this account? Write down account numbers. Just start a spreadsheet. Just start a little spreadsheet. I've got videos on YouTube, how to build a personal financial statement. They're all out there. Grant, I know you've taught how to do this. People just build a personal financial statement so you know what you got and you know what you owe. And we're going to see it's going to be out.
Hang on 1 second. So when you're talking about a personal financial statement, you're talking about a balance sheet, basically assets, checking account, savings account, money markets, treasuries,
syndications,
furniture,
funds,
cars, funds, 401ks, and then underneath that would be the debts, credit card debt, house mortgage, right?
Yep, auto loans. And we're going to talk about a debt snowball after that process. You know, is there some debts we need to get rid of? But how can we make a good decision and plan our future the next 3, 5, or 10 years without at least seeing where are we at right now? Where are we at the starting line? So that's
personal financial statement.
Okay. Number 2, play artist. Now you get to draw a picture. Now this is where I teach
play artist.
You get to draw a picture. And what I call is the trifecta is, what is that image? All of us are so visual. I am. I've got to draw an image of what are my operations on the left? What am I trying to do? Do I have a side hustle? What's my day job? And in my trifecta, and I know you've seen it before, on the left side, I want to put, what is that ordinary income? What pays the bills? What's generating money? What's my product, my service, my game? What is that? On the right side, we want to draw this picture of what's over there in my retirement accounts? What real estate do I own? Funds, notes, ETF, stocks, bonds, mutual funds. What are my personal residence? How much equity is in my home? Take that balance sheet and turn it into a picture, because that picture comes alive. It gives you excitement. And at the very base, that's where your trust is, your 1040. What's my legacy? What's that bottom line that I'm really trying to build? And that trifecta becomes the image of filling in the blanks, the visualization that I carry mine with me everywhere I go in my bag, because I can look at it on a plane and go, oh my gosh, I need to add something here and add something there. And I like a picture, because when you meet with a professional and you can lay out a picture, it's going to help escalate your planning opportunities too.
Yeah. And I missed the third thing. So the second thing is play artist, or what?
Draw the picture.
What is your ideal financial situation? Like is that where you're playing, where you want to go?
Yeah. And so when I say play artist, draw a picture, visualize where you want to go, what's here now, and then where do you want to go? And I know that sounds maybe ridiculous, that you'd think this would be number 2, but Grant, as a professional, I've met with thousands of clients. I've got my attorneys and CPAs, and when we meet with a client, sometimes it's hard to extract from them what they even have and where they want to go.
Yeah.
Well, if I can draw a picture of that. So if you can draw a picture of what do you have now, and the ideal is I've got income creation on the left, I've got wealth building on the right, and down at the bottom, I've got my tax return and my legacy, which is going to bring us to number 3 here. But I want to understand where's all that money flowing? And then number 3, I'm going to look at my tax return. You've got to know what your tax return looks like, people.
Your tax return, or the tax obligation coming up?
All the whole picture. Because when you look at your tax return, it's going to say, hey, I need to make more deposits, or man, I paid this much in tax last year. The number 1 cost in your lives, people, over your lifetime is going to be taxes, but no one wants to talk about it.
Yeah, dude, people talk about inflation every day. Oh my God, bananas and nuts. And I'm like, well, don't buy that shit.
Yeah. And let me say this.
The other thing is, what people are not talking about is your taxes, guys. Like, you're paying 40% of everything you earn. If you don't live in New York, New Jersey, or California, you're paying 40%. If you're living in New York, New Jersey, California, you're paying probably 55%. That is the most expensive single expenditure any family in America has.
And no one wants to talk about it because it's boring or complex. People, it's not that hard. That's my claim to fame. I make it freaking easy to understand. I even train CPAs that are like, that made sense. It's
Yeah.
supposed to make sense. But here's the thing. When you look at your tax return, you're not looking at it to do it. I don't want you to learn how to do a tax return. I don't want you to freaking open TurboTax. You
Yeah.
want to be looking at it to say, am I writing off my kids? Am I writing off my home office the way I should? My auto, my dining, my travel? Am I building all of this wealth I'm trying to build an income? How is it showing up on my tax return? Just to know the principles so you can have a good conversation with your advisor.
Yeah. So Mark, let's just talk about that. Like, so I have my trifecta. I have my tax return. I'm looking at the tax return that you talk about in step 3. I'm looking at the past one, what I paid. I don't know what my write-offs are. But let's say the guy doesn't know that he can write off his kids, and he can't write off he doesn't know that he can write off a 6,000 pound Range Rover rather than a 3,500 pound Honda. What are my write-offs? What are people's rights? Let's just talk about some of those things. How many exemptions should every person be taking? Should they be getting, I'm just going to ask you a slew of questions, and you hit them all.
Okay.
Should I be getting a refund? Should I be paying any taxes? And if I'm paying taxes, what should it be? Should it be 55% or should it be 15 or 12 or 10?
Okay, great questions. And I'll hit this quickly too, because I want all of you people engaged in this. This is so powerful. When you look at your tax return, I want to look at the bottom line. You're going to see it up on, frankly, on the second page up there. You want to look at total tax due. Yeah. You may have got a refund. You may have paid in enough, but what was my taxes that I paid? And you're going to divide it by your adjusted gross income, which is back on the first page. And you're going to, that's called your effective tax rate. You want to know, what's my effective tax rate after all the garbly goop? Am I at a 27%, 32, 45, 50? So you want to find this starting point. Okay. Number 2, when you start to look at your tax return, you want to start to understand, where are those lists of the things I'm writing off? I have clients come to me all the time. Oh, I know I write off that piece of real estate or that rental property, or I know I write off this. Really, show me on the return. Well, I don't know. It's just there. We start to look at it and their accountant missed it. They didn't know. And it's a simple place. So you start to familiarize yourself with the tax return. Let's rattle them off. People, write these down. Home office, auto, dining.
Hold on. Home office. Okay.
Home office. Don't be afraid of it.
Let's ask you about the home office. Okay.
Say it again.
Should everybody be claiming a home office?
Yes. Over and over again, and every day, twice on Sunday. So many accountants over 20 years ago got afraid of the home office and created this chilling.
It's over, dude. That's over.
It's over. Take the home office. Every one of my clients does. Travel everywhere you go.
Wait a minute. You missed dining. You said,
I'm sorry.
Donald Trump passed a law where you can write off 100% of dining now. So how do I have to dine in order to write it off?
Well, and I'm the spoiler, but the dining 100% write-off ended in 22. So here in 23, we're back to 50% of dining. But people, remember, you can write off even dining by yourself when you're traveling, which I'm going to bring up as number 3. But with your dining, anytime you're out talking business with anyone, which Grant and you and I live by that principle, we're always talking business. And this is the tips, the bar tab, the food, the everything, the valet. Well, valet is going to be travel. So you're going to be putting on that dining bill a lot of numbers and a lot of meals, and a lot of people miss that. I want to see it.
Let me ask you this. So it used to be that I had to identify between a business dining and a personal dining. Is that gone now?
No, you do, but the strategy, and this is again, like you and me, whenever I go out, I'm talking business, which is who I am. And so I'm going to ask people, hey, what's your small business? What are you doing? How's your real estate coming? What are you invested in?
Right.
Boom. Right off. Right off.
So this is not, you're not doing something creepy. It's just the code says, for all you guys watching right now, like, just understand that the IRS, somebody in government said, we want to stimulate the economy, give people a write-off for going to dine. You're not cheating anybody, okay? They want you to spend money on dining. They're giving you an incentive to write off 50% of that meal if you can identify that you are actually doing some business. Now, one little trick that I do, I hope you don't mind us just having a two-way here, is when I'll put a small portion every year of just personal dining on a credit card and keep everything else on this business card. So when I get audited, and I will, I'll be like, look, all my personal dining, just me and my wife and the kids is on that other card. 90% of the time I'm doing business, it's on my Amex. And so just a way for me to kind of protect myself if it comes up.
Yeah. And I like this. Let's go down this just rabbit hole for 1 second too, everybody. Here's a practical approach that Grant's doing. Many of you put Grant or me on pedestals going, oh, you're making money. You got all this stuff going on and you must have someone do it for you. No, we do it ourselves. In my wallet, I have 2 debit cards. My personal debit, that's for groceries, underwear, going to the mall, whatever. And then my business card for my corporation or LLC for my operations.
Yeah.
That's writing off everything else, right? And that's where you're doing it. It's easy. You just boom, boom.
So my kid, when we're at dinner, my kids will ask me, what card, Papa? And I'll be like, put it on that. If it's business, it's going on the black card. If it's personal, it's going to go on the Visa card. Travel. How much of travel can I write off?
Travel is a beautiful thing because it's 100% when you're on a business trip. So it could be airfare, rental car gas, Airbnb, Uber, everything. Now dining's separate, but when I'm even traveling for business, I can write off dining by myself. I don't even have to talk to someone about business because I'm on a business trip. Right. That's why I kind of blend that dining and travel.
Yeah. Now, what does it have to be? What does it have to be considered? Dude, we could do a whole show. We should just do a show on tax write-offs because I could stay here right now.
Oh, dude, it's so fun. I love this stuff. I geek out on it.
Can I write off my haircut?
Oh, okay. Well, we'll come back to haircut. Let me answer travel. I'll go with maybe on haircut.
I said I might need a little haircut right now. Okay, travel. Yeah, let's go back.
Okay, so we know that travel's 100%. Dining.
I'm going to go spend 2 weeks in the south of France. Can I write that trip off?
Maybe. So here's where we go. Here's the reasons why a trip could be a write-off. I'm going to visit a rental property. I'm going to go meet with a client. I'm going to go network with a potential partner. I'm going to go meet a vendor. I may be looking at products that I'm going to be using in my business to sell. I may be developing a service. I may be in the south of France giving a workshop for a couple of days, doing a little signing, a book deal, interviewing a local influencer. Now, if it's 2 weeks, here's what's cool. The day you travel there is a write-off. The day you travel back is a write-off. The days you do business or have an important meeting is a write-off. Yeah. If you're there over multiple days, a business day ends up being around 4 hours. The IRS likes to, if you're going to be there repeatedly. So if you're doing 2 weeks in France, by the time we do the bookends of your day to get there, your day back, business days, we might write off half the trip.
Right. And you're saying if I could do 4 hours of business a day, I could write off the whole trip.
Yes, but I will say this, that's when you're doing repeat, like say you're going to travel and work on a rental property. So you got a rental property somewhere in Arizona and you're going to go out and check on it every day. I better be putting in 4 hours. But if you do a trip and you're like, hey, I had a meeting with this person for lunch on this day, a meeting for this person for lunch that day, they were critical meetings and you just put a little note in your calendar. I don't need to do 4 hours because I had an important meeting each day. But if I'm doing the same thing every day, that's where the IRS is like, 4 hours.
Yeah, and look, I think you guys use some common sense here. Okay, if you're on a 2-week trip and you're doing one meeting a day that's 15 minutes, you're going to get challenged. It's not whether you get away with it; it's what happens when you get audited.
What's your story?
And then you got to defend yourself, and you can't because it's 6 years later.
Yeah, and the beauty of this.
I don't know. I forgot. Like, is there any tips that people can have for like keeping track of all this?
Yeah. And here's the thing, just like back to the credit card deal, you have a personal card in your wallet or on your Apple Pay that's strictly for personal. Again, groceries and clothing, the basics, toiletries, yada, yada. Everything else I'm trying to write off as a business, and I'm going to use the business card. And what it does is it makes it easy for all of you. Make sure you're using your business card or credit card. It could be a debit card. It may not need to be in the name of the business either. You're just going to dedicate the Visa to business, the Amex to personal, whatever.
Yeah, it doesn't have, you don't have to even have an LLC.
Correct.
You don't have to have any kind of name on your company. You could be doing business as Boo Boo. Right. And just if you're just consistent, like this card goes for business and this card goes for personal, and then back it up in the case of an audit. Okay. So travel, I got it. Entertainment. I know they're hammering on the entertainment thing, which is
I love so much of what Trump gave us with the dining write-off for a couple of years after COVID, and the auto deduction is off the chart nowadays. Entertainment's gone. We lost entertainment. Hopefully it'll come back at the end of a lot of these tax write-offs that came through the Trump Tax Cuts and Jobs Act. We'll hopefully see entertainment come back. No write-off for entertainment. But what's cool is if Grant and I go golfing.
What's the difference between entertainment and dining?
Well, if I was just going to say, if you and I go golfing, I can't write off the tee time, but I can write off the entire food at the club before we go out on the course. The little golf cart comes by, I buy food and drinks. That's all a write off because you were there and I talking business, but I can't write off the green fee. So,
so if I take my staff, I think a lot of people misunderstand this. Let's say I have an event, and at the end of the event, I give everybody drinks.
Write off.
I don't think so.
Now, now here's a couple thoughts. Okay, you're going to love this, Grant.
I don't think so. Me and my partner are arguing about this right now. And this is what you guys should be doing, by the way. You should be digging in, not turn this over to the HR block guy.
No, like, hell no. Okay.
He's saying you can write it off. And I'm saying, bro, the way I read this thing, when the event's over and I send people out and say, hey, go have a drink on me, and the bill comes back at $3,000, I can't write that off because that's considered entertainment.
Nope.
No, I'm wrong.
Nope. And dude, I'd stand your freaking okay. Now let's break it down here for a minute. And this is how it works, people. When you're meeting with your tax advisor, you want to push your tax advisors to work through it logically and talk through it. Okay. So let's say now you're talking about employees, not patrons or members of your programs or anything. These are your employees you're talking about.
I'm talking about my clients.
Okay. Could it be, it's going to,
because my employees can't drink when they're working.
Okay. This is going to be a different, answer if we're going to deal with employees versus, in fact, let me repeat that. This is going to be a different answer if it's going to be with employees, like an employee event versus a customer event.
Okay.
So let's go down the customer event. So I'm out building. You do your 10X event. By the way, freaking rocked. I love being in Vegas with you. Dude, those interviews you did changed my freaking life.
Oh, that's awesome.
They were freaking awesome. Steven Anderson, Tom Brady, Matt Damon.
Steven Smith, yeah.
Oh, I mean, Steve Smith, Steven Smith. Oh, yeah, Stephen A. Smith. Oh my gosh, I can't believe I said Anderson. Yeah, Stephen A. Smith, love him. Anyway, they were just so emotionally moving. Okay, so let's say you're doing a 10X event. Say that some of you small business owners are. You're having them over for a barbecue. You're making a presentation. You're doing a what? You do it at a hotel, whatever. You're doing an event with your customers. All those event costs are 100% write-off. Because you're providing food for your people. You're providing food.
So, bro. I don't think so, man. I don't think so. Let's just play it out here. Let's say we just had a couples event in Cabo.
Okay.
When the event was over, we took them all zip lining. Okay.
Not a write-off. Not a write-off.
Yeah.
Zip line.
Yeah. We spent, $20,000 on, it's not a write-off for us, guys. Nope. And you guys need to know the difference between that, because when you go claim the zip line, the U.S. government is going to be like, no, that's not a write-off.
Yeah.
And then see, that changes my decisions about, do I want to take people's zip line?
Right. Now, the grant says, okay, now after the event, we're going to go out to dinner. Okay. Difference. Now we're going to go eat food.
I think that's entertainment too, man.
Nope. Whoever your accountant is, we got to save you some freaking money, because what you're doing is then you're going out to dinner with your customers as part of the paid experience they paid you for.
I'm reading it right now. You can no longer deduct entertainment expenses. The ticket cost is so if I send everybody to a Michael Jackson concert afterwards, not deductible.
Not deductible. Drinks before and after?
If you entertain at sporting events, if I brought somebody to a Laker game, not tax deductible.
Not tax deductible.
Dude, man, they got to bring that one back. That's a
I love it. But you and I go to the Laker game and we're talking business and we eat food, we drink, whatever at the game. That's a write-off.
Yeah, but the courtside tickets were $25,000. Right?
No, okay, but we get back to
20. And so what do I get? I get to write off the popcorn, but I don't get to write off the. That's ridiculous. Okay.
I know, but you're looking at the little thing there. I love your example, and it's true. But back to the zip lining and the drinks. Your people, hear me out. Your people paid thousands of dollars to go to this special event, this couples training, the mastermind group. You have to collect revenue. to
Yeah.
get them down there. You're claiming income that you're going to pay taxes on. Anything you provide for them that's not an entertainment experience, but all the food, all the housing, the transportation, the transfer costs, the materials, the printing, everything you pay for that event is an event cost.
No,
100%.
I'm with you, but not the zip line.
Not the zip line, but the food after and the drinks, yes, because it's a
Right.
part of the event.
Yeah.
So that's where dining gets to be fun, because it's this little carve out. Dining is part of an event for employees, then it's a different story, like I said early on. But this is for your customers. You're claiming income on this.
Yeah.
You get to write off the crap to do it.
Yeah.
Lots of fun.
Yeah.
All right,
no, I know, but okay, let's talk about autos. Okay.
Okay.
I'm going to go back and research this entertainment thing. I disagree with it, and I hate this law, by the way. Like,
Oh yeah. Well, and here, this was negotiation with Trump and the IRS and Congress. He said, I want a better auto write-off, more mileage, better depreciation, bonus depreciation. I want people out stimulating the economy, buying cars and electric vehicles, all of that. The kitchen sink was thrown in. Wonderful.
So
and the IRS said,
what is it for autos now?
oh, well, it depends on the size of your auto. It depends. This is my calendar, Mark Kohler calendar. It's got, I use it on my desktop too. So, but let me say this. So the deal was in that congressional negotiation was, we'll give you better auto. We'll give you the freaking 100% dining for 2 years. Well, the IRS has hated entertainment for years. And they said, just take off entertainment. So during this phase out of the Tax Cuts and Jobs Act laws, we're hoping entertainment, we're going to get that back, because it hurt a lot of places. It hurt all the entertainment venues, the theaters, the sporting events. All those skyboxes were a write-off. Now they're not. And that's a big deal. So we'll see if we get it back. Okay, auto. Everybody, you go with mileage first. Mileage is always the way to go. We love it. This year it's at 65.5 cents per mile whenever you're to and from and running errands and going to meetings. 65.5 cents per mile.
I don't even know what that means. So I can write off, if I drive 100 miles, I can write off $65.
Yep. 10,000
of the car. Now, what if I lease the car? I didn't own it. Wouldn't I be better off to lease it and write off the entire lease?
Okay, so I was saying first, mileage is usually the first best option for everybody. Then we can go down the actual path and we can say, I'm going to write off the lease, or I'm going to buy the vehicle and depreciate it all in one pop. And if it's over 6,000 pounds, the SUV or truck, bam. But the auto deduction itself with depreciation even got better. So people have to decide, am I going to go mileage or actual? And you look at your usage, how many miles you're putting on.
Right.
You know, a fun one is, let's just say this. Let's say you're doing you've got a Prius. I always tease the people, you're just driving a Prius. No one will admit it. Okay, I'm driving a Prius. How many miles per gallon you get? Oh, I'm getting 50 miles per gallon. Okay, so how much is a gallon of gas? Well, in my area, it's $4. $4 for a gallon of gas. Okay, well, my Prius is getting 50 miles per gallon. 50 miles times 0.655. I'm getting a write-off of $32 for every $4 of gas I put in that freaking Prius. Because see, it's 65 cents per mile. So if I drive that 40 miles on that 1 gallon of gas, I got a $32 write-off.
Yeah, because you're writing off the depreciation on the car because the car's value is going down.
Yes.
You put miles on it.
Yeah, but people miss this.
Yeah,
I see constantly. It's all these little things that add up.
Yeah. So look, I'm me and my wife, consult me here. Me and my wife are thinking about buying a Honda van that weighs 3,000 pounds or an Escalade that weighs 6,200. And I'm like, let's buy the Escalade. And she's like, it's too big. But the Escalade's 115,000 and the Honda's 70 grand, whatever. Which one should I buy? I can write off the entire Escalade when I buy it.
Okay.
And I can only write off the mileage on the Honda.
Now, am I going to get in trouble with Elena depending on my answer here? I need to know, which way am I going? Am I on Team Grant or Team Elena?
You're always on Team Grant, bro.
All right, we're going to Escalade. Hell yeah. No,
100%. But I mean, from a tax, if let's say it wasn't Elena or me, let's say we made our decisions based on reducing our biggest expense, which is the taxes. Which one should I buy?
Okay, now this is deep. You're going to love this. We got to be careful to not let the tax tail wag the dog. It may be a freaking awesome write-off and can make sense to someone that has the financial wherewithal to do that. And they need the Escalade. They want the Escalade. They've earned it and they have the financial wherewithal to do it. And it is a great tax write-off. But someone else that economically, it's a dumb move. It's a great tax move, but it's economically a bad move. So we have to be careful,
because
folks.
they can't afford it. You're saying they can't afford it.
Yeah. So people are like, oh, I need the write-off. I need the write-off. And they make dumb decisions. You gotta be careful.
But let's keep it real. Okay. The only people that actually get to take advantage of the tax code are people with money.
Oh, no, I don't know, Grant. I think you're going to love this.
You got to have money to take advantage of the tax code.
No, well, think about this. I'll challenge you on this one. We now, over 40% of Americans have a side hustle.
Yeah.
30 million Americans have a side hustle, driving Uber, whatever, selling on eBay, blah, 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 internet marketing, yada, yada. Millions of Americans have a side hustle. They get the same write-offs. People might be able to make.
No, they don't, bro. They don't. Come on, stop it.
Okay, no, okay, hear me out. Say I'm making
stop it before I bring out the ammunition.
Okay, I'm going to prove this to you. So say I'm making.
You don't get the tax write-off, Mark, if you don't make the investment.
Yeah, well, okay. We want to go Uber driver, a side hustle, Uber driver. I'm making $2,000 a month driving Uber.
Okay.
I'm going to write off my auto, my dining, my home office, my car washes. I'm going to write off anything related to that Uber business. I may claim zero income. I just made 24 grand a year with my side hustle and paid zero tax. But then people go out and knock it out on TurboTax or screwing around on Google or a bad accountant, and they don't take the write-offs for their side hustle. And now they're paying more in taxes. So yes, there's more zeros involved when you're making freaking tons of money. We love it. And we can use more strategy and game the system even more. But you little side hustles out there, folks, we could make 2 or 3 grand a month tax-free.
Yeah.
Just by writing off crap that we normally wouldn't.
Okay. I'm going to share something, Mark. Okay. I'm going to share something that I've never shared in public.
Okay. Is this your tax return? We're throwing it.
This is my tax return, 2021. Okay. 2021.
Okay.
I don't think I should show, maybe I got to block that out, that last, because you guys don't have. Okay. My taxable income last year, or somebody's taxable income.
Okay. All right.
Sherry's going to
hypothetically.
Somebody's taxable income. Here you go. What do you think I should have paid on taxes on that number?
Okay, tell me what it is. Just
Can you
see it? Okay, well, since other people can see it, tell me the number.
26 million.
Oof.
$2,608. Taxable. That's taxable.
Okay. You know what Grant should have paid? People, you want to know what he's going to pay on that?
What?
Zero.
No, actually, I got a refund.
This is as good as zero. You got a refund? You paid zero?
Refund of, here it is, $239,728.
Dude, you rock. I love you.
So if I ever run for president, guys, I've already showed you my tax bill, okay? I'm proud of it. I don't want to pay taxes, okay? I've already paid enough. Like I think people need to understand also that income taxes are different. That's not the only tax people pay. You want to talk about the other possible taxes that people are paying?
Oh, well, we get into property tax, which in some states can be brutal.
Yeah.
And we get into sales tax, which can be really regressive.
Sales tax.
Property tax, sales tax. We've got
state income.
Yeah, income tax we're dealing with.
State and federal
income tax.
Yeah.
We've got FICA, Social Security and Medicare.
Withholding, basically something that's probably going to be broke by the time you get to it. That you're paying into, they're sharing with other people.
Yep. Then we've got all these, just go stay at a hotel or Airbnb. All the municipalities, the cities, the county taxes, the school, the roads, the gas tax, the blah, blah, blah tax. Some estimates are, and it gets more regressive. The less money you make, the harder it hits. Because a lot of these attacks.
The less money you make, the harder it gets.
Yeah.
And this is what I was saying to you earlier. I don't know why you
Fair enough.
You need money to get tax write-offs.
Oh my gosh, you twisted into that. I don't know. I'm just saying, the more money you make, I'll agree with you on this point. The more money you make, the more you can write off. It gives you more flexibility, more options. But the same write-offs are there for people. These other taxes, everybody, this is important. These are regressive taxes. When I spend, I pay a tax. When I'm wealthy, I'm making money and I'm effectively having a much lower tax rate because I'm building wealth rather than out consuming. And so the divide between the poor and the rich starts to get more stark, and it's hard. So this is why if you're not making a lot of money and you've got a big plan for the future, you got to own this. You got to get into it. You got to start building that wealth and understanding tax write-offs so you can start playing like the rich. The strategies are there.
Do you think that I should feel bad that I got a refund?
Hell no. And on this note,
do you think that I'm a bad person because I got a refund?
No, you know why? I shouldn't feel. I'm applauding Grant for paying no tax. You know why?
Well, wait a minute. I did pay tax. I paid last year. My companies would have paid $80 million in property taxes.
Oh, okay. There you go.
That I can't get away from. You cannot not get away from. Now, the properties, except for my homes, the properties funded that property tax, which, by the way, is another write-off. Is that right? When I pay property taxes?
Oh yeah, total write-off. 100% in commercial in income producing properties. Our home property tax write-off is a whole other story.
Yeah, home property taxes is or is not a write-off.
Our personal home property taxes are write-off is limited.
Yes.
Where under income producing real estate, there's no limits.
No limits. Like I can write off the whole 80 million. What's the limit on a home?
Oh my gosh, you're embarrassing me now.
Dude, you're supposed to know everything. Come on.
I'm not playing in the SALT deduction every day.
But the reality is nobody can know everything at every given moment because it's changing all the time.
Yeah, and it's hard. But I'm not playing in the Schedule A. What Grant's asking about is Schedule A, the SALT deduction.
Yeah.
And it's in the cap.
Yeah.
And it's brutal. Okay, so let me throw this out.
That's fine.
Important, Grant.
I don't need to hold you to it. I'm still reading about the entertainment. I'm getting ready to bust you on entertainment tax.
Okay, 10,000. Okay, now let me throw this out. You're going to love this.
Limit is 10,000. That's all you can write off on property tax.
State and local taxes combined.
Jesus, man.
It's terrible. This is where
SALT means when you live in California and you pay, it used to be when you paid 13%, let's say 130,000 out of $1 million to the state of California, you were able to use that to reduce your federal tax bill from 1 million to 870, and you would pay federal taxes on 870. Now you're going to pay $1 million. You're going to pay, let's say, 50% to the federal government on the $1 million less 10,000 bucks that you paid to the state.
It's brutal.
It's brutal, bro. Like, I don't think people understand how much they're getting robbed right now.
Yeah. And I wanted to answer this though, everybody. I love that Grant didn't pay tax. And it's the same reason I got Donald Trump's tax return right here on my laptop, 432 LLCs feeding into his return. He paid $600 in tax in 2016. But you know what Donald Trump was doing back then and what Grant's doing right now? He is creating jobs. He's stimulating the economy, and he's rewarded in the tax code for helping America grow. He is building America, and all of you investing with him are doing a good thing. You're building America, and the tax code should reward you. Yeah. So when Grant can write off depreciation and all that, and he pays zero tax, hell yeah.
What should people's itemized deductions be? How much? Like,
what should they be writing off on their itemized deductions?
I'm just looking at mine right now. Look at my itemized deductions, which I don't know what that even means, really. That's off of Schedule A. Like, this is awesome, dude. We should do this more often. We should go through somebody's tax return on a show.
I love it.
And show them what they missed, man.
Yeah. And, I know some people would, so many of you would benefit from this, because here's the thing. We need to demystify the tax return. Yeah, people, exactly. I want you to look at Grant's got his sitting on his freaking desk. Mine's on my laptop right here in front of me. You should know your tax rate. You don't have to know how to fill it out.
Yeah.
But where are all the write-offs?
Yeah. What do you think? Okay. Out of what do you think my itemized deductions were?
Oh boy, you're killing me. I love my.
Just guess. I gave you my what was
I'm going to say,
I gave you my taxable. What do you think my?
okay, now you got to be careful with me answering because your charitable write-off is going to be in that. And so you're going to be throwing down, how much did I put out in charity? Because charity is going to be an itemized. A lot of people tithe or give to charity. So let's say if we take charity out, you got some. Oh,
No, just go itemized, including the charity.
all right. Oh, I'd say you're, well, and I don't know what you throw down in charity. Let's say $1 million, 500 grand, $1 million. I don't know.
$9,022,000.
How much?
$9,022,000.
Oh, dude, you're a generous man. That's what you're doing.
Right there, man.
Oh, people, you know what that means? You got a guy that's being charitable. He and Elena, they're the real deal. Because you don't get to itemized deduction number without throwing down in charity. And we appreciate it. That's incredible.
Dude, listen to my taxes I paid. $4,151. This is on itemized. State and local real estate taxes personally, $158,000. I can't write well, I guess, are they saying I can write that off or is that excluded?
It'll be limited. There'll be another line on the inside.
$10,000 actually.
Yep, it shoots it over to the left, right?
Yeah. So here's $4,100 that was state and local. Here's real estate taxes, 158. That was 162, but they only gave me credit. See, this is terrible, dude. They only gave me credit for 10,000. That's right. That's right here, everybody looking. Okay. Yep. They only give me credit for 10,000 of this 162. Now that brings me to the last question, which is about the house. Okay.
All right.
Do you consider, and this is why I think homes are terrible investments. Okay. Like, do you think the home should be considered as part of somebody's net worth calculation?
The equity in their home, in their personal net worth.
Or their negative equity.
True.
Their liability. Should it be considered?
I do.
You do. Why do you?
Because it's an asset. Now, this is probably where we agree is what's next. Let's say we put it on the balance sheet. What am I doing with that asset? Is it making me money? Am I am I pulling out a HELOC and buying rental with some of that? This is where Dave Ramsey and I part ways. I love Dave Ramsey helping people get out of debt, consumer debt, all that, but then pay off.
You don't love Dave. You're just hoping he gets you on his show or something.
No. I said, I love Dave for the get out of debt part, but his concept of I'm just going to pay off my home and sit on 300 grand that's making me nothing.
Yeah.
Not a smart idea. No, hell no.
Yeah.
But it's an asset. You know what you're going to do with that asset. That's the problem.
It's not an asset. I completely disagree with you. Okay. It's not an asset. I mean, even the Internal Revenue Service is penalizing me for owning one.
Yeah, fair enough. So what's your alternative? Now, when I lived in Southern California, it was cheaper.
I'm just saying, because the problem with it, the way I was explained it when I was in accounting, was the reason this guy didn't believe it to be an asset was because when you leave that house, you're going to go to another house. So you're going to drag your equity over to the next house and then to the next one and the next one. And I'm like, okay, well, so how do you get out of the loop? He's like, don't own your home, rent where you live. That becomes basically there's no liability, okay? Because look at the millions of people that lost their home in 2008, 9, and 10. People hate me for having this conversation, by the way.
Hey, you heard me as I was just saying the sentence when you went on this. I said, when I lived in Southern California, you people heard me say it. When I lived in Southern California for 6 years, I rented. It was cheaper for me to rent a luxury home and take my money and invest in real estate.
Yeah,
and rent. And I freaking loved it.
Let's say you have a $2,000 rental and you got a 3-bedroom rather than a 2-bedroom, and you use the 3rd bedroom for an office.
Right.
Can you write off 30%, 33% of that rental to that office?
No, I'm talking about the home I'm renting. So I'm talking about my personal residence.
Home, or I'm renting an apartment.
Okay, home or apartment.
Yeah.
Doesn't matter. So I'm renting a home or apartment. I can take the square footage. Now, I mean, there's going to be maybe other square footage like kitchen, bath, and all this, but I would say, let's say it's 20% of the home. Right. I've got stuff in the garage. I've got business, blah, blah. Yeah, I'm writing that off because you don't have to own your home to do home office. I can write off that apartment.
That's right. That's right. And not be responsible. Now you don't have a mortgage because you can't write off the property taxes more than 10 grand anyway, guys.
Agree. Oh, buying a home in California made no sense to me. And people are like, how can you be a tax lawyer and live in California? I'm like, I know, I got to get out of here. The bedroom community for California now is Idaho. That's where all Hollywood's going. You know, I watch TMZ, I watch the news, and, you know, Aaron Paul's over there. I got, you know, Harrison Ford. Yeah, that's where it's at.
Yeah. Awesome. Okay, look, hey, Mark, it's been great having you, man. I really, you know, you're so generous with your time and your information. And your most recent book is which one? Because I'm looking right now, I'm looking at what your CPA isn't telling you.
Well, I love, but what your CPA isn't telling you is a gateway drug to like getting into this, because it's a story, it's a fable of a family that all of a sudden realizes, holy crap, we could be doing more with our taxes. It's a fun read. It's an easy read that once you get through that and you're like, okay, I'm ready to throw down Tax and Legal Playbook. Tax and Legal Playbook. It's a desktop reference. Yep. You got it. Thanks, man.
I got them all, bro. I got them all. Now, last thing, and I'm going to read this to you.
Okay.
This is, and I'm still debating this with 3 other guys right now.
All right. I get to
Because
chime in.
what I do, and this goes back to what you were saying earlier, you guys need to take charge of the biggest expense your family and your business has is the tax code. And I don't turn that over to an accountant. I don't turn it over to the CPA. I don't turn it over to the tax guy. I'm like, I'm going to read this shit and understand it myself. And this says on February 26, 2020, the Department of Treasury and the IRS published a notice of proposed rulemaking, REG 100-814-19. This is about the entertainment tax. Okay.
You mean the entertainment deduction?
Yeah, business bills and entertainment, section 274 generally disallows a deduction for any item with respect to any activity of a type considered to constitute entertainment, amusement, or recreation. Paragraph, quote unquote, entertainment expenditures.
Okay.
So.
And you want to throw dining in with that or drinks?
Nah, the drinks is really the issue.
Okay. All right.
Okay. So if I reward people at the end of my conference, because I'm telling my buddy, I'm like, bro, you spend a lot of money on alcohol at these events, or bringing in the Circus Olay chick. We do a lot of that kind of shit, right?
I'm gonna
say they're gonna come back. They're gonna come back and grab me and say, okay, you brought everybody to an event that night. Now, what if my cost is 0 on it? Though then I don't.
Well, there's no write-off. The cost is 0. Now, let me throw this out.
Yeah,
I'm going to put this.
That's what I would do. I would basically say I would push all my cost into another part of the event.
Well, sure, but so someone's getting drinks and someone paid for it, and it was probably you. So how are we going to?
What if the hotel didn't bill me for that, and they just built it into the cost of my other convention? And I can't break it up because I have no clue.
Well, the IRS would break it up and audit, and I'm going to say
they're going to break it up for me. They're going to
break it up
and then break it off in me.
Yeah. Okay. Now I'm going to say this publicly here on YouTube. Mark Kohler, licensed CPA in like what 5-7 states, attorney in a couple, and AICPA, whatever. I'm standing behind my credentials and malpractice insurance. And here's the whole deal: you hold an event, and you throw an open bar at the end of that event.
Yeah.
It's not just a 50% write-off. It is 100% write-off.
You think so, huh?
I'll stand behind it and sign the freaking tax return for you. Dude, I know it.
Dude,
the case law's there, dude.
I love that. Okay, guys, I'm reading right off of the IRS. It's called Section 274 if you want to know.
Okay. Right.
If you want to know more about Mark, just hit me below and I'll get you his contact information. If there's anything that we said that you disagree with, you're like, there's no way that would work there, put it in the comments. We always appreciate a thumbs up or a thumbs down, whatever you think. Give a thumbs up for Mark and a thumbs down for me. I know you guys like to trash on me and I don't mind it. Mark, I'm going to have you back, dude. We're going to do this again. What I'm going to do, if anybody that's watching is willing to have their tax, maybe your last schedule, what would you call it? Your tax?
I'd say your last 1040, your 1040. If you did your 22 tax return already.
Yeah.
And you got your 1040 you're sitting on with your S Corp, maybe you got your LLCs, put the whole package in there, black out your social.
Yeah. Yeah.
We'll tear it up.
And we'll go in and tear it up. And just because, by the way, you can always go back and recoup some of that stuff. Yep. Is that right, Mark?
You can amend up to 3 years ago. You can amend. Maybe there's some money on the table. We'll see if we can find you some money.
So if you're interested in us ripping your tax, your 1040 apart for last year, put your comments below, or email Annie@grantcardone.com, and we'll do another show with you. Me, Mark, we'll look into your 1040 and see if we can get you a tax refund, man. Mark, thank you, brother.
Thanks for having me, Grant. You rock. Keep up the good work, dude.
Appreciate you, man.
Appreciate you.
Hey, man, that was awesome, bro. That was, I tell you what, if we did that show, people would love that. They love
getting into it. You're so detail oriented. I love it. Not everybody's willing to do that.
Yeah.
You know your stuff too. It's a fun debate. It's good stuff.
Yeah. No, look at that entertainment thing, man, because when I read it, I was like, they're all telling me, no, Grant, you're wrong. And I'm like, bro, the way I read this.
The trick is I need to find you the part where it says food is an exception to that. I got to get you that. And then that's your get out of jail and your free card. And you'll be like, oh, okay, there's my escape hatch.
Yeah.
By the way, I want to get Sabrina and Scarlett. We got to talk about board of directors for families, having your own family board of directors, which is part of the trip to Southern France, because you're going to have your board meeting with your family. And I want those girls getting write-offs, building their Roth IRAs, buying real estate and the funds with, and your kids can be in a 401k with you. I mean, there's so much. We got to hit that sometime.
Yeah. Well, we already did the kids show.
That's right.
The kids show. We'll have the kids on.
Yes. You gotta have a board meeting. This is how you hold a board meeting, kids.
Yeah. Awesome, man. Appreciate you, buddy.
Appreciate you. All right. We'll talk to you. Thanks.